Let's go to David Trone here from JMP. There you can see earlier today, I believe that was Mr. Corzine. David Trone with us. Summarize why Wall Street cares about this Jon Corzine event.
Well, you know, I think the story is that the markets have once again shown us that everyone's mortal, and I think the problem is, you know, over the last several decades, we put halos over certain people, and then it doesn't matter if you're Jon Corzine or John Thain or Hank Paulson or John Paulson or Bill Miller. Your judgments always need to be questioned, and I don't think there was enough questioning going on at MF Global. I think there was too much free reign and not enough of the board oversight of some of the investments.
If this was a free reign and somebody screwed up, and we all know that, and you're innocent until proved guilty, may I suggest that the knock-on effect here is these congressmen and women of the Agriculture Committee, they want blood, and they're going to get it from a Wall Street. Does it tilt global Wall Street towards more of a utility Wall Street? Does it take the entrepreneurial spirit out?
Well, the unfortunate thing is anytime, and we've seen this time and time again over the last 50 or more years, anytime there's a problem on Wall Street, people jump to the conclusion there must be criminality behind it, and that's unfortunate. Capital markets is an evolutionary process, and it's not hairspray. We're not testing it on lab rats and bunnies. We're actually doing trial and error, and the error part is where markets have problems.
Do you use hairspray? I don't use any.
We have to use the trial and error process. It is the only process. So we do have these setbacks with structured product, with derivatives, with tech stocks, with mortgage-backed securities back in the 80s. Now the only issue here, there are two issues. A bad bet, which is not criminal,
fine,
bad judgment. And then there's the missing customer cash. That is the potential aspect of criminality here, which we need to sort out.
When you look at this and how it redounds on your view for fourth quarter and first and second quarter 2012, obviously you've seen the layoffs. You're making your marks down in that. Where is revenue for New York Wall Street right now? Flat?
Yeah, if you get out the noise, the DVAs and some of that stuff, I think the core revenue will be roughly flattish. Obviously, the issue, I've been talking to the companies this week pretty intensively, and everyone's saying it's like crickets. The phone's not ringing, it's very quiet. Not only the people in the business, but actually the IR staffs aren't even getting investor calls because, we're all captive to what's happening in the euro, in the eurozone. And if they sort themselves out, I think we'll be off to get back to more normal levels. But if not, we're going to stay in this point of paralysis where there's not a lot of activity.
What will you be listening for today in the questions from the House Agricultural Committee?
Well, I think if we're really focused on what's important, I would be looking at the questions surrounding the missing money, the missing cash. I think that's the real issue here. Unfortunately, I think if it goes into populist ideas, I think that signals us that particularly with the election year and the new Obama rhetoric that. We're going to politicize this thing.
It is remarkable to me that we have the former governor of New Jersey, obviously affiliated for years with Goldman Sachs, going in front of Frank Lucas of the 3rd Congressional District of Oklahoma, which I think is bigger than New Jersey, and it's where the tall grass is, and it's all the romance of the West. It really defines the divide of everything we're talking about in America, of David Trone's Wall Street that you cover, and the rest of America. I mean, I think it's almost an iconic moment for 2011.
Well, I think you're absolutely right. There's an astonishing lack of understanding of how important Wall Street and the banks are to the little guy. I mean, the little guy is the biggest beneficiary of all of this capital market system. And Jamie Dimon talked a lot about that yesterday in his conference call. When Wall Street does poorly, Main Street is definitely going to do poorly. That is absolutely the case. We're all sort of in this together. You have a bigger wealth effect when times are good to the wealthy, but when times are bad, the wealth effect actually narrows, and the inequality, ironically, tends to narrow in bad times.
Your enthusiasm for the banks and your single best buy right now?
Well, you know, we don't have a lot of conviction right now, given that you know, we have this euro issue. I really look at the euro as 80% chance of working itself out, and my group would probably be up about I'd say about 20% on that development. Unfortunately, if the euro breaks apart, you know, you have more downside. Right. It's probably 20% of a breakup, right, but you're going to have a 40% downside in my stock. So you know what an expected value formula is. I think you get about 12% upside in my group, but it's going to take some time. I don't think there's a lot of developments coming in the next few months.
Thank you for blowing up your schedule to come in today. David Trone on an incredibly busy news day.